Go ahead and start the recording. There we go. I spent my weekend glued to the TV. Unfortunately, my wife had me doing a honey-do list, so I had to put the TV out in the garage. But watching the NCAA tournament this past weekend was awesome. A lot of good games on. Generally, during the NCAA tournament, which is college basketball, for those of you overseas, we here in Indiana, you kind of root for the teams that are from Indiana, and luckily we have two teams that are in the Final Four. Well, not the Final Four, the Sweet 16. We have Notre Dame and IU beat Kentucky over the weekend, so that was awesome. It's pretty exciting. So let's go in here and take a look at what's shaking out. Pretty quiet since, we've just kind of survived as we stated on Friday, we've just kind of survived 2 weeks of heavy volatility caused by fundamental events. 2 weeks ago, we had the ECB meeting, which drove a huge amount of volatility in the market as far as the dollar and the euro. And all the currencies for that matter. And then last week we had the FOMC meeting, which was a big surprise as being bearish, and that drove the dollar extremely weak. And if you look at what's happened with the market since last week, we had the huge rundown on the dollar. Dollar was weak across the board, and then everything from there has been highly consolidated. But the good news is, in the last 2 weeks, we're actually up. We've had some good trades that have kept us afloat, and while other people probably have, for the most part, have probably been losing some money over the last several weeks, we've actually been made a little bit. We haven't gone stellar or anything, but don't think that there were a lot of millionaires made from average Forex accounts over the last 2 weeks. It's probably the exact opposite of that 90% kind of losing their ass, if you will. So let's go in and look here. Bring up the trading sheet. Global markets are down slightly today, or else they were last time I checked. I mean, there's not a huge amount of action. You have all the U.S. futures are down just slightly, indicating just slightly negative opens. I mean, not real, not too bad. Oil's barely down, so it's trading above 41 a barrel, or trading above 40 a barrel, which means gas prices, kind of a joke I always say, which means gas prices are probably up to $7 a gallon across the U.S. Nope, they haven't actually quite raised them as much as I thought they would. And then we look at what's happening over in Europe. You got the FTSE down 0.28, DAX is down barely. The French stock exchange down just barely. I mean, not huge moves happening across the world. The only real big move stock market wise, the Nikkei was down 1% overnight. Shanghai stocks were up 2%. So you look at Asian stocks as being more mixed there. So all in all, just kind of a mixed kind of start to our week here from a high yielding asset standpoint, meaning stocks. News this week, it's going to be a quiet news week after having 2 weeks of a lot of build up to news events. It doesn't necessarily mean there's going to be a lack of volatility, but if you look at news this week, and happy spring, by the way, for those of you in the Northern Hemisphere, you look at today, I mean, there is nothing shaking out today. There's really nothing coming out today that's really worth looking at. Whenever central bankers speak, that's always going to show up as a high impact event. But CPI, 5:30 a.m. tomorrow morning, we do have CPI coming out for the pound. That could be a big one. Consumer prices is a big number. That's probably one of the major news announcements this week when you kind of look at everything as a whole. So, I mean, that's something that could have an effect on the pound, a volatile effect on the pound, which is actually the currency I'm kind of looking at this morning. And then you kind of go through everything else. Most of the big news coming out for the pound, retail sales coming out on Thursday. For a consumer-based economy like Great Britain, those two, consumer prices and retail sales, those two numbers could have a large impact on the pound. I don't think traders are necessarily waiting for those news events. I think we're just going to see a quiet U.S. news week this week. Core durable good orders, that's barely moved the market in the last several weeks. That's coming out on Thursday here in the U.S. And we do have our final GDP coming out at 8:30 on Friday. That could have some impact just because the Fed was so had some more negative speech, if you will, concerning inflation. But all in all, I mean, when you compare this to the last several weeks, it's not a huge, there's just not a whole lot shaken out as far as news goes for this week. What does that mean to us? Well, I think it's pretty obvious. If we're looking at a quiet news week, in the absence of fundamentals, and make no mistake about it, most of the big moves we've seen have been fundamentals, technicals take over. And so that's what we're going to look to trade, is just trading more on a pure technical basis. So let me just take you through the motions here. We're going to wait until after 9:30 before we make any type of decision on our trades here today. So let me start off. Sorry, I was looking at a question that came over. Trend counter trend moves on the dollar is still the way to go. It's worked out well for us in the last couple weeks, just kind of looking at trading the most liquid pairs, which are the dollar pairs, and trading those based on what we see. So let's first go to our the first trade that I wanted to look at. If we are going to look more technical at the market today, let's go to our Mr. Pound. And I'll kind of zoom in. You can see this one's been all over the map. Big down move, big up move, and then it's been quietly consolidating. But I think what's kind of interesting about the pound is when you look how consolidated all the other pairs have been. And here, let me just pull that euro back up real quick. Euro up, sideways, dollar Swiss up, and now it's sideways. The yen has been mainly sideways down in here. New Zealand, Australia was one of our trades we were looking at for last week. That actually would have worked out pretty well for us. Dollar CAD sideways. So the ones that have been kind of making the most noise, if you will, is the pound has been probably made one of the more significant moves since the market closed on Friday and then opened back up for the week. So I wanted to focus in on that one because it looks like the one that's showing a little bit more weakness than the others. One thing that I would kind of put a note on here is that with the pound, here, let me just pull that over real quick. Wait, that's not the pound. There we go. One thing that could drive the pound really low this week is if their CPI were to come out negative tomorrow, because it's such a large piece of their puzzle, if you will, from an inflationary standpoint. I kind of zoom in here because I've liked kind of the slope here. Look how negative everything's been down in here. Average prices, every time it gapped down, came back up, and you look at these big red candles, small green candles, big red candle, and then you got coming down, you got a lot of selling pressure in here. So you kind of got to like just the overall look and feel of where the pound's been in the last 24 hours. And I think, if anything, if we're going to trade more volatile movements, the pound is certainly capable. It's trading right below that 4,400 level. So what I'm looking for is everything is negative. Trend line negative, PitView indicator negative. And it hasn't really done anything since when you go back for the last 6 hours. Here's 9 o'clock, 8 o'clock, 7 o'clock, 6 o'clock, 5 o'clock, 4 o'clock, 3 o'clock candle dipped down a bit. And now that this is where we stand, kind of consolidated right here on the pound. I'm looking for a sell entry. All of these trades we're going to look at after 9:30. We're going to wait for all the, we have already gotten the Asian stocks that have opened and mainly closed. We got Europe stocks still open, which are slightly down. We got futures down slightly here in the U.S. So we're going to wait until after 9:30. We're going to wait until all the financial markets get rocking and rolling here before making any decisions. And the other interesting thing is that it's kind of hovering right here at that 4,400 level. It's already -5 on the 1 hour totals. It's negative like 13, and it's been showing a huge amount of selling as far as the slope of the trend line goes, the LP trend line. And then put our stop. Let's see here. Bring this up a bit. Stop doesn't have to be too terribly far away. Right up above this high. Here, I'll just put a little stop thing right up there, and then a limit. For the limit, you can go to 1-to-1 risk reward on this. And I'm going to put in 2 limits. That's for 1 lot. If you can do more than 1 lot, if you can do 2 lots or 4 lots or whatnot, you can split it in half. Or do limit 1-to-1. Because I think it could make a more volatile move to the downside. I think the pound has it in, is capable. For those new to the class, limit 1 and limit 2 means that if you're doing more than 1 lot, you can split your trade in half, meaning look for 1-to-1 risk reward on the first lot, and then look for a 1-to-1.5 risk. But if you close that first lot out, you move your stop to break even, continue trailing that stop down with a 3 candle or 3 bar reversal, and you can look for more profitability or more limit on the 1-to-1.5 risk reward portion. I'm not going to write this down, but since that would be putting us very close to the 4,300 level for looking for a 1-to-1.5 risk reward, I would say if it does hit 4,300, if it gets down close to that like 4,310 level or 4,305, you may at that point want to look to move your stop to lock in the 1-to-1 risk reward, so that you at least get that. There's no certain level to look at, but if you start seeing some support being made at that 4,300 level, those psychological levels, don't necessarily have to close the trade out. Just move your stop to where you lock in a 1-to-1 risk reward on the second lot. Or if it's a 3 candle reversal at that point, then working here. There we go. And let's post this to the sheet. We'll call this a dollar strength trade. On Friday, I want to mention this real quick. I just want to mention Friday real quick since we're here. I didn't take the buy on the pound, and mainly because usually when it gets to like the noon hour, I'm usually done with trading when it gets to be like 12 o'clock. And this was like the 11 o'clock candle right in through here. It did break and close above the 4,500 level. So if you took that, yeah, you probably would have, no doubt would have been stopped out. It just, I was pretty much done for the day by the time that happened. On Fridays, if something doesn't happen by noon, I'm usually done. So I didn't take that buy on the pound. Either way, even if you would have taken the buy on the pound and lost on that one, if you were trading multi-directional, as we did on Friday, the Aussie did give a signal to sell when it broke through that longer term head and shoulders pattern. So you could have had an opportunity there to you would have basically been, you could have made partial amounts of that money back on Friday on the Aussie dollar. So it all depends on how you traded. If you took both of those, Friday trades, where we had sold Aussie dollar. So if you had taken both of those, you would have been you may have been at a loss of like 10 pips. Maybe even more if no, it didn't gap down that far over the weekend, so it's not that big of a deal. All right. And looking at this long term, you can kind of see if you were to connect kind of from here and up, the other break that would be occurring there is it would be breaking kind of a shorter term trend line, if you will, if it broke through that level. I mean, this damn near looks like a double top in here, besides that one hour where it came up and came back down to where it almost looks like it's breaking out a reversal pattern here. There are a lot of things to like about shorting that pound in that direction. There we go. So I can go ahead and I'll take those objects off the list now so the charts aren't so dirty. And then if we are looking for multi-directional trades down in here, you can kind of look at, the euro and the Swiss have both been, it's kind of a hard case study on both the euro and the Swiss, mainly because it's just been kind of a hard call to make in the markets on these two, on the euro and the Swiss. It had broken up above a trend line here and then hit its head right on these highs when it was breaking up above these highs. If you're looking for dollar week trades, I mean, you could look at this one of two ways. It did form kind of that same head and shoulders pattern right in through here that it's breaking down below. So some of these are making some very subtle reversal patterns. But if you look at where this level is right in through here, you can see it's finding a large amount of resistance right here at right below the 113 level. On euro, I know there's a lot of euro traders in the class. The only thing that would make you want to look to the upside on this is the fact that there has been quite a bit of buying pressure in the euro. Every time we want to go short on this thing, it seems like we're wrong, because every time we think that it's the move up on the euro could be done, we always get proven wrong, which I'm pretty used to being wrong. I'm married. But anyway, looking at this one, you could set yourself up. The 113 level could present some problems, because here's the 113 level right up in here. This is another one to where, we're really just looking for consolidation breakouts, and there hasn't really been that much to look at as from a consolidation standpoint. But the euro certainly looks like one of the ones that's making the most headway to the upside. I would kind of wait for some added confirmation here, and this would be more of a short-term one anyway. Kind of looking at some shorter-term dollar week scenarios here. Seeing this is not one of those ones where you'd want to be aggressive as long as it's green when it breaks through, or even wait for a close above this high. The high right back in here is high right back up in here is here. Let me put this up here real quick. 113.416. That's really where the main resistance was. The stop, I believe, you could just put down below this low, 112. Put one pip below the swing low. $112.599. 112.599. Put that in the wrong spot. There we go. And then you can look for a limit on that of 1-to-1 risk reward. It all really depends on how much volatility hits the market here today. Some of it will also be based on what actually drives the market today. We shall see. I just got a question here on the total view. The asterisk that's by these currency pairs, by the way, when you're looking at the total view screen, which I've been using more of the LP trend line, more so to look at the major trends. You can see the dollar's right up there as far as strength goes. When you see an asterisk like dollar is strong versus the pound, it means that it's not the asterisk just means that it's the dollar's not the base and the pound is not the quote currency. It's actually the pound dollar pair. Like you can see dollar Swiss, that's how it shows up on our screens. Dollar Swiss pair, dollar yen pair. But when you're looking at this, it just means that in order to get all the bid and ask imbalances up, they have to kind of shift. They have to make pretend that the dollar is the base currency. So all the asterisks mean is that, like, if you're looking at dollar versus the pound, you know they kind of have to switch these things up to make sure that everything is showing the bid and ask. They kind of have to reverse them to make sure that everything is showing on the same level. But dollar versus pound with an asterisk means that it's not the dollar pound pair, it's the pound dollar pair. So if you see the dollar strong versus the pound, it means that it's actually the pound dollar pair. You'd look to be short that. Same with dollar versus euro with an asterisk behind it. You can kind of see dollar versus euro. It's weak versus the euro. But it's not the euro. It's not the dollar euro pair. It's euro dollar on the trading screen. So that's what those asterisks mean, is that when you're looking at the currency, like whenever you look at the yen, there's an asterisk next to all of them. It means that it's not yen New Zealand. The yen is the quote currency in all those pairs. So they put the asterisks on there just to make sure that when people see strength and weakness, that they realize that when they look at the pair on their screen, like if you're looking at the dollar pound pair, you're not looking to buy dollar, you know, you don't accidentally go in and buy pound dollar, because you'd be looking to short it. Let's see here. Did I get that one put in there? Yeah. Pound is still sitting there consolidated. The yen is making a slight break here to the upside. The yen, the only problem with the yen here today, looking at the yen, somebody was asking about the yen, so I want to make sure that we get into that. It is breaking through this high right in through here. Well, it hasn't really broken through that high yet, or closed above it. It's kind of poking its nose through those previous highs in here. It looks like it's breaking through consolidation. You can see that it's made kind of a little trend line right down in here. So, I mean, there's a high amount of consolidation. If you're looking for any direction on dollar yen today, I would kind of stay away from it, just because with the lack of large amounts of volatility in the stocks so far of what we've seen around the globe, I think it would take a huge amount of move in the underlying stock market in order for the yen to break up. So I haven't really been that focused on the yen here today. Looking at the pound and the euro kind of, I think, gives us our best shot at being at trading the dollar in the proper direction today. Dollar yen, I don't trust that consolidation. I mean, it had a huge drop last week, just like the rest of them. You could look for this one for a possible buy opportunity. If I was looking for any direction on the dollar yen, you can look to either buy or look to sell beneath this trend line right in through here. But it just there just hasn't been a huge amount of activity. The buys I would be looking for, just because it's making a slight tilt up down in here. But the opening bell today, it's just now happening at 9:30. I just don't expect a huge amount of volatility to be hitting the market on that pair. I think some of the more interesting ones, when you look at dollar strength and weakness, like we're looking to trade dollar strength versus the pound. I actually do like trading dollar weakness versus if you want to kind of look for multi-directional trades, because pound has been acting, it kind of acts back and forth between commodity currency and dollar-centric currency, if you will. But there was, where was it? Let me go down here. It's right at this 7,600 level. Where was that high? Let me take a look at this Aussie real quick. Actually, let me kind of go through the commodity currencies. I was looking at several of them this morning for different types of potential trade opportunities. Let's see, New Zealand's looking down. Aussie's looking up. Where's dollar CAD at? Where's that low? 30204. These are all kind of just sitting there right near their bottoms. Let's take a look back at Aussie. I think that was the one I was looking at, because it just had a better overall. Yeah, this was it. Sorry, I was just trying to make sure I had a little bit of my mojo. See, I was making this downtrend right in here on the Aussie. We've already gone kind of short on it. And you see that it's kind of broken up to a new high above the trend line. Gold's been a little mixed here today, but it did make a kind of a divergence as it was coming down. It was making little higher highs in through here. And I know these two candles made it come lower. but it still hasn't broken through any type of lower lows yet. This is just one that you could think of because this is another one that would not have a huge amount of risk to it as far as dollar weakness goes. You kind of look at the dollar versus the commodity currencies, whether it be Aussie, New Zealand, or Canadian. You could look to trade those into more of a dollar, more of a dollar weak mentality. Yeah, that was the one I was looking at. And then all you'd have to do is put your stop right below this low, 0.71 pip below the swing low. Because it kind of has come right back down below the 7,600 level again. That would be 0.75910. And I forgot to put limit on there, didn't I? Limit on this would certainly be 1-to-1 risk reward. See, how much was that? That was 60 pips. Check our pound real quick. Want to make sure where the pound was. There we go. And here's something interesting for you. Oops, why did I delete that? I did not want to delete that. I'll delete the objects. There we go. So it's starting to get really close, but if it does break through that high, you can almost look at the Aussie as being kind of a multi-directional trade. If it comes back up towards the 78.6 level, you know what? I think I was looking at this previous high. I didn't pull my chart out enough. I was thinking this morning I was kind of looking at potential Garley patterns, and it looked like there was an ABC correction that could be forming on that, but I was actually looking at the swing high. So skip that. Let's not make this more confusing. That actually was not a bear. That's not close to being a bearish Gartley. Never mind. Never mind. Just forget I said anything on that one. That's what I get for not zooming out on my charts enough. Let's see. It's kind of go through a rundown here. See, not much work in there on Aussie yet. A lot of consolidation. We're still waiting for it to break through this low, though. I want to get it if it hits into some momentum. Euro dollar, nothing yet. Aussie dollar, nothing yet on that one. The only real mover there is the yen, which is a little unexpected. Let's see, we do have the stock markets open now, which is kind of a joke because they're not doing anything. They've been open for 8 minutes and NASDAQ's up 1, Dow's down 8, S&P's down 1. So you got kind of the more narrow-based index in the Dow Jones is down a little bit. Broader-based index in the NASDAQ is up 1 point. So we're not getting a huge amount of volatility there. Yeah, let me check out that yen again. That's kind of an interesting one. Well, the yen, the only stipulation I would put on it is exactly what Phil said. Here, let me kind of zoom in on this a little bit. This previous high right over in here, I mean, that was right at the 112 level. Because that's what the yen is, one that tends to hit its head pretty hard off of those psychological levels. You know, see, it came down to 112, bounced off of it, broke through, came back up, hit its head right off of it, and came back down. So that 112 level would be your key level if you are looking at yen trades. It seems right now, anyway, to be the only one that's really making any big moves thus far. So if you were looking to trade dollar strength, I would definitely look towards a breach of that 112 level. Let's see, the low here, 111.34. Out of all of them, this probably is not my favorite, but I'll go ahead and put it on there. I would look for a close above 112, not just a breach of it. And I would look at a +5 1 hour T. So I would look for those buy imbalances to go up. Problem with this one is as far as your stops and limits go, it would have to move another 20 points to get above that 112 level to get even close to it. If it does breach that 112, I would look for a close personally. I mean, you would want some major confirmation on that one. The stop, I probably wouldn't be putting it. I'd put the stop at a 50 max, which on the yen is not that big of a deal. That's more like a 40 pip stop. I'd put a 50 max stop on there. And a limit of 1-to-1 risk reward. That is another dollar strength trade. mean, it does look good. I mean, it was coming down so hard in here, and it is rounding back up. So it is breaking into higher, some subtle, very subtle higher highs and higher lows right down in here. Not by much, but if it were to go +5 once again, you're probably going to see this thing raise higher. So yeah, I mean, this is certainly one that you could look at for a dollar strength trade. Just try not to do too much fishing today. If we learn from our history, we actually had more success trading in a volatile market, even though the volatile market didn't go so much in the direction that we thought it would, than we did when there was lack of news and lack of fundamentals for a week. So just to kind of bring you up to speed on what I'm talking about, generally when we've seen not a lot of news events coming out in the market, you know, not a huge amount of action in the markets, we tend to see we tend not to do as well in our trading because we start looking for different trades and different technical setups, if you will. So the lack of volatility, lack of news, you got to be careful with trying to go out there and find too many trades to put on. Better to be patient sometimes and not go overboard on picking trades, especially when there's a lack of volatility. I know a lot of markets are closed on Friday, including the U.S. It's a Good Friday, so I mean a lot of markets are going to be closed on Friday. It is kind of a holiday week, if you will. So the lack of liquidity, I should call it, versus could be an absence of volatility. Or it could create sideways volatility to where just things go up and down and it becomes more of a liquidity provider's market. Let's see, what's pound doing? There's really nothing shaking out yet. Aussie's kind of close. Euro's not close at all. Yeah, be patient on these. Let's see here. There's a high right up in here, 76256. That would still have 20 pips to go. CAD could really go in either direction today. Swiss is building a base right down there. When you look at most of these, pound dollar, dollar yen, this really isn't trading trend counter trend moves on the US dollar. What we're really doing when you think about it is we are trading consolidation breaks in either direction on the US dollar. That's really what the strategy is. And today is March 21st. So since that's already putting us into, from a dollar strength, dollar weakness standpoint, I would, you can do $1 strength trade and $1 weakness trade. I just wouldn't go too overboard on either one of those. Basically whichever dollar strength trade executes first, take it. If there's $1 weakness trade that executes first, take it. You don't be afraid to be in both of them because that would essentially put you into a cross pair. Let's say if you were to buy dollar yen on dollar strength, and if you were to go long Aussie dollar on a break for dollar weakness, that would essentially make you long Aussie yen. So don't go too crazy or too nutso there. you can be in both positions if you'd like, but don't, I wouldn't go short pound dollar, long dollar yen, long euro dollar, and long Aussie dollar, because even though you'd have some probability, at least half of those of possibly making a move and hitting profitability, you'd probably just end up going the long route for more break-even trading. So we're just trying to catch, it'd be nice if we can catch one end or the other on these moves. I'm going to go ahead and stop things there. That's probably all, that's all I got today. Could be in for a light trading week, so before we tap out for the day, let me show you kind of what I'm talking about when I say, the lack of news and everything. We could have some carryover news-wise from what's transpired in the last several weeks, but let me just kind of show you. Let's just use euro dollar as an example. Like, this was no news, sideways movement on the euro dollar, down, up, down, up, down, ECB announcement, damn, bam, and then after the ECB going to the FOMC, down, up, down, up, down, up, down, and then FOMC announcement. So these big moves, where most people think they may be technical, they're not. They're fundamental moves that really caused a lot of these moves. They were caused by the fact that we were waiting and waiting for the market to kind of break out of some of these levels before entering in. So just keep that kind of in the back of your head as you're trading today, is lack of news, lack of significant news anyway, could lead to a lack of trading direction, lack of prevailing trend. There we go. So here's our sheet for the day. Nothing spectacular, nothing like earth-shattering for the day. It's loading up right now. So that's it. I'm going to go ahead and take off here. Be careful. So I'm going to go ahead and take off here, and I will chat at everybody tomorrow morning. And just manage your risk and make sure you don't risk more than a certain percentage of your account. So I'll chat at everybody tomorrow morning. Thanks for coming in. Bye-bye.